Good morning and welcome to today's episode of Crypto Daily. We're excited to dive into the latest news and trends shaping the world of cryptocurrency. I'm joined by my co-host, and together we'll explore the biggest market-moving stories of the day.
That's right. We've got a packed show for you today covering everything from regulatory updates to market volatility. Let's start with the biggest story of the day. Bybit CEO has publicly labeled Pi Network a scam, citing an official police warning from 2023.
That's right. This warning from Chinese authorities claimed that Pi Network was targeting elderly people with a suspicious referral scheme and token lockup offering. Since its launch, the Pi Network token has plummeted by over 60%. This is a major blow to the project's credibility and has sparked concerns among investors.
This news highlights the ongoing issue of scams and phishing schemes in the crypto space. It's a reminder for investors to do their due diligence and be cautious when investing in new projects. Bybit's CEO has taken a strong stance on this issue, and it will be interesting to see how the community responds.
Absolutely. Regulatory bodies have been working to crack down on these types of scams, but it's clear that more needs to be done. Speaking of regulation, we've got some big news from the SEC. The agency has agreed to drop its lawsuit against Coinbase, pending approval from its commissioners.
This is a significant development, especially given the SEC's history of taking a tough stance on crypto exchanges. However, as we've discussed before, there seems to be a shift towards a more crypto-friendly tone under the current administration. This move is just the latest example of that.
That's right. Coinbase CEO Brian Armstrong has been vocal about the need for clearer regulations in the crypto space, and this decision is a major victory for the exchange. It's also worth noting that this is not an isolated incident. The SEC has taken several actions in recent months that suggest a more lenient approach to crypto regulation.
We'll be diving deeper into the implications of this decision and what it means for the broader crypto ecosystem later in the show. But for now, let's take a step back and look at the bigger picture. What does this shift in regulatory tone mean for investors and the market as a whole?
Well, for one, it could lead to increased confidence in the market. Clearer regulations and a more supportive regulatory environment can help to drive growth and innovation in the space. However, it's also important to remember that this is a rapidly evolving landscape and there are still many unknowns.
Absolutely. As we continue to explore these themes throughout the episode, we want to hear from you. What do you think about the SEC's decision to drop its lawsuit against Coinbase? Do you think this is a positive development for the crypto space? Share your thoughts with us on social media, and we'll be sure to address them later in the show.
We just finished discussing the growing institutional interest in Solana, and now we have another major player throwing its hat into the ring. Franklin Templeton has filed an S-1 registration statement with the SEC for a Solana ETF, seeking to track the price of the cryptocurrency.
That's right. Franklin Templeton joins a growing list of asset managers seeking approval for Solana ETFs. It's interesting to see this trend unfold, especially considering the challenges Solana has faced in recent times. This could be a sign that institutions are starting to see the potential for growth in the Solana ecosystem.
Building on what we discussed earlier, it's clear that institutions are taking a more nuanced approach to the crypto market. They're not just looking at Bitcoin and Ethereum, they're exploring other assets like Solana, which could offer unique opportunities for growth.
Speaking of Ethereum, we have some interesting news from India's gaming community. Super Gaming, a popular gaming studio with over 200 million players across 5 titles, is launching its B3 game chain via Ethereum's base network.
That's a significant development. Super Gaming is a major player in India's gaming community, and this move could unlock new gaming experiences for their users. By leveraging Ethereum's base network, Super Gaming can tap into the scalability and security of the Ethereum ecosystem.
Exactly. This is a great example of how blockchain technology can be used to enhance existing industries. In this case, Super Gaming is using Ethereum's base network to scale their gaming ecosystem on-chain and unlock new experiences for their users.
It's also worth noting that this move could have broader implications for the gaming industry as a whole. As more gaming studios start to explore blockchain technology, we could see a shift towards more decentralized and community-driven gaming experiences.
That's a fascinating topic and one that we'll likely be exploring in more depth in the coming weeks. For now, it's clear that Super Gaming's move into the Ethereum ecosystem is a significant development, and one that could have far-reaching consequences for the gaming industry.
We'll be keeping a close eye on this story as it unfolds. In the meantime, let's move on to our next topic. What's the latest on the regulatory front? Are there any updates on the SEC's stance on crypto ETFs?
Actually, yes, we have some news on that front. Let's dive in and explore the latest developments in the world of crypto regulation.
As we were just discussing, the recent uptrend in the crypto market was swiftly reversed by the $1.5 billion hack at Bybit, causing a ripple effect across the board. But what's interesting is that the downturn wasn't solely due to the hack. The plunge in U.S. stocks later in the day also played a significant role in adding to crypto's bad day.
That's right. It's a classic case of the broader market sentiment impacting the crypto space. When U.S. stocks retreated, it put pressure on crypto prices, making it a perfect storm for investors. It's a reminder that crypto is not immune to the whims of the traditional markets.
Exactly. And speaking of regulatory pressures, there's been a new development in the U.S. Senate. A bipartisan group of senators is pushing for the SEC to rethink its stance on crypto staking in exchange-traded funds.
That's a big deal. If you recall, the SEC initially blocked staking when crypto exchange-traded funds were granted, but these lawmakers are suggesting that the SEC may have been off base in its decision.
Yeah, it's a significant challenge to the SEC's authority on this matter. The senators are arguing that staking is a legitimate way for investors to participate in the crypto market and that it shouldn't be unfairly restricted.
This is an interesting development, especially given the SEC's recent crackdown on crypto staking programs. It's possible that we could see a shift in the regulatory landscape if the SEC decides to revisit its decision.
And it's not just about the regulatory implications. This could have a significant impact on the crypto market as a whole. If staking is allowed in exchange-traded funds, it could open up new investment opportunities for institutional investors and potentially drive up demand for certain cryptocurrencies.
That's right. We'll definitely be keeping an eye on this story as it develops. In the meantime, it's clear that the regulatory environment for crypto is still evolving, and investors need to stay vigilant to navigate these changing waters.
Absolutely. We'll continue to bring you updates on this story and all the other major developments in the crypto space. For now, let's move on to our next story.
Building on what we discussed earlier about the rising concern of crypto hacks, we have some new information on the recent Bybit hack. According to Arkham Intelligence, citing ZachXBT, North Korean hackers from the Lazarus group were behind the massive $1.5 billion hack on Friday.
That's right. This group has been linked to several high-profile hacks in the past, and it seems they're still very active. The attack appeared to be quite sophisticated, and it's worrying to see such a large amount of funds being stolen.
Absolutely. This just goes to show that the crypto space is still vulnerable to these types of attacks. We've been discussing the importance of security measures and regulations, and this is a prime example of why we need to take these issues seriously.
Speaking of regulations, there's been some interesting news regarding the SEC's lawsuit against Coinbase. It appears that the SEC is planning to drop the lawsuit, which could be a significant development for the crypto industry.
That's a big deal. Coinbase is one of the largest crypto exchanges out there, and a lawsuit from the SEC can have far-reaching implications. If the lawsuit is dropped, it could be seen as a positive sign for the industry as a whole.
And it's not just Coinbase that's seeing some positive news. Altcoins like KIO and IP have been soaring in price, with some seeing gains of over 90%. This could be a sign that investors are becoming more confident in the market.
That's right. We've been seeing a bit of a shift in sentiment lately, with some altcoins starting to gain traction. Of course, it's always important to do your own research and not get caught up in the hype, but it's interesting to see some of these smaller coins getting attention.
Absolutely. And it's not just the smaller coins that are seeing movement. Some of the larger coins like Bitcoin and Ethereum have been experiencing some volatility lately, with prices fluctuating quite a bit.
That's right. We've been seeing some big swings in price, and it's a reminder that the crypto market can be quite unpredictable. But at the same time, it's also a sign that the market is still active and that there are opportunities to be had.
Well, we'll continue to keep an eye on the market and bring you the latest news and analysis. In the meantime, it's always important to stay informed and do your own research before making any investment decisions.
Absolutely. And we'll be back with more news and analysis after this break. Stay tuned.
We've covered some massive stories today, from North Korea's Lazarus group being linked to the Bybit hack to the ongoing debate about staking in exchange-traded products. Let's dive back into the Bybit hack and what this means for the broader crypto industry.
The fact that the Lazarus group is behind this hack is concerning, but not entirely surprising. We've seen time and time again that these groups are becoming increasingly sophisticated in their methods. The real question is, what can exchanges and other crypto companies do to protect themselves?
That's a great point. We've talked about the importance of robust security measures, but it seems like no matter how secure you are, there's always a way in for these groups. Perhaps the answer lies in better collaboration between exchanges and governments to share intelligence and best practices.
I agree. And speaking of governments, the SEC's stance on staking in exchange-traded products is another area where we need to see some change. As we discussed earlier, a bipartisan challenge to the SEC's exclusion of staking from ETPs is underway, and it's essential for maintaining America's competitiveness in the digital asset markets.
The U.S. has been falling behind the rest of the world on staking policy, and it's imperative that we catch up. By allowing staking in ETPs, the SEC can help level the playing field and provide investors with more options. It's not just about competitiveness, though. It's also about innovation and progress.
Exactly. And that's what's at stake here. If the SEC continues to drag its feet on this issue, we risk stifling innovation and driving talent and investment overseas. We need to see a more forward-thinking approach from regulators, one that balances risk management with the need for growth and innovation.
So as we wrap up today's show, what are the key takeaways? Firstly, the Bybit hack is a stark reminder of the ongoing security risks in the crypto space. Secondly, the SEC needs to rethink its stance on staking in ETPs to maintain America's competitiveness. And finally, as investors, we need to stay vigilant and keep pushing for better security measures and more innovative products.
And looking ahead to the markets, it's likely that we'll see some volatility in the short term as investors digest the news from Bybit. However, in the long term, we're still bullish on the prospects for crypto, particularly as we see more institutional investment and mainstream adoption.
That's all for today's show. Thanks for tuning in, and we'll catch you again tomorrow.
And don't forget to follow us on social media for the latest updates and analyses from the world of crypto. Until next time, stay informed, stay secure, and keep on cryptoing.